What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with another crazy bets in the stock market this week, courtesy of Wall Street Bets. We are on to week 6. So if you are excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. And just like I say every single week, these are all anonymous. The point behind these is just to cover some wins, some losses, crazy bets that we have from Wall Street Bets, and also to bring that financial education, again, to bring some good learning points as we go into it. And again, this one is a little bit of a shorter video because it was only a 4-day week in the market. At the time of recording this, it is about to be Friday, and also I'm recording this a little bit early because I have some time. School has started back up, so my schedule's been a little bit crazy, but we are still here to bring the content for you all, of course, free of charge. So we're going to get right into it with the first pick that we have here. It is a SPX 0 TDE. I think he means DTE, first of all, in this case here. But basically, the idea behind this one to start it off is that this person right here has made over $10,000 on about $1,000 she bought on SPXW call options here. Now, the reason why I put this one up here is because this person made over 1,000%, but he could have easily lost all of his money relatively quick. When you are trading 0 DTE options or 0 days to expiration, that means you are really, really banking on the fact that the stock moves in your direction on the same day that you go into it. 0 DTE trading for options is very risky and very degenerate in terms of gambling in this case, right? Because we've watched it time in, time out, where the market pumps in your favor, and then there's a huge reversal that comes out and it crashes the stocks or whatever the case is, and you lose all your money. So please be mindful. And when you see people post these on here, these are absolutely unbelievable gains, making over 1,100%. But again, he could have lost all of his money just as easily. So keep that in mind as they're always looking through any kind of forums, any kind of posts, those kind of things. On to the next one here. We have an SBet YOLO, $194,000. And he's currently down $56,000 of unrealized gains. Again, you don't not realize those gains until you actually sell off your portfolio. First of all, I don't think I know much about this company. SharpLink, I have no idea what this company does, so I don't really know much about it. But what was interesting about this picture on Wall Street Bets from this individual is that he has GameStop shares, which is super risky. I don't know if he's still living the high life of GameStop 2020 with Warren Kitty. I have no idea. But what's interesting is that he has 600 shares and he's covered his shares with covered calls. It's like, okay, why would you cover the calls for a degenerate stock like GameStop, but why would you not cover the calls for SharpLink? I don't know if it was an earnings play or not. But even so, if it's an earnings play, I would 100% still cover my shares because God forbid the stock goes against you after earnings and you lose a lot of money. At least the cover calls will kind of offset your losses a little bit. So I just found this one interesting because he's doing covered calls against GameStop shares, but not against SharpLink, which is a lot more of his portfolio. It looks like, I don't know if there's more money in this account here. I have no clue, but it's $138,000. This is only $13,000. You're going to cover the $13,000 in your portfolio, but not the $138,000. Again, could have been an earnings play. I honestly have no clue, but it's never a bad thing to sell cover calls on your shares, especially if the strike price is above what your average cost is. Say he sells a $22 covered call here and it goes to $22. Oh, wow, you made some money, you made some premium, you got out of your position and you made profit. Like it's not too bad, right? Obviously, right now it's trading at $15 or so he's kind of a little bit of a loss. So my hope would be that he did sell some cover calls even before this loss hit here, which would be absolutely awesome. But in theory, he could sell 90 contracts of covered calls. 90 contracts, just like that. And then again, the premium you can get from it, he could either dollar cost average his SharpLink position and make it go lower in terms of his average cost basis, or he could buy into GameStop more. I have no idea, but again, very interesting that you cover your GameStop shares, but not your SharpLink ones with a lot more money in it. So, again, cover calls, never a bad thing, especially if you set your strike price around where your average price is. Moving on to the next one. This person says an apple a day or some BS like that. This is a person who bought options here, as you can tell here, but this person did options in a way that made more sense. He made $78,000 right now at the time of recording this, at the time of me, grabbing the screenshot here that he had. And what I like about what he did here is he bought these August 6th and he put an expiration date about 4 months out. He's giving the options time to move. Okay, not the 0 DTEs, not even the week DTE that you have there where it's like a 1 week only. He's giving Apple 4 months to make its move, and now these options are sitting very, very nicely. He's almost, looks like he over doubled his money here, looks like, which is absolutely awesome. Over 100% return here, but he's giving his stock and his options time to move in his direction that he wants. And that's the thing to play with options. No matter what kind of options you're doing, that is the way to do options. You give yourself a lot of time. You buy leap options, which is about buying further dated ones, because even if the stock market crashes 1% tomorrow, they're not going to lose as much value as a weekly or a 0 DTE one. So having longer dated expirations, yes, it does cost more, but it will definitely help you because their losses are going to be minimalized until you get closer and closer to it. So you can kind of, sit through the rocky waters of the time and then hopefully get some nice profit at the very end. So shout out to you, making over 100% return. Absolutely amazing portfolio. Hopefully he's doing very, very well. And if he's sitting on these, great. If he's cashed out, absolutely awesome. On to the next one here, we have GitLab YOLO. I've never even heard of GTLB, but he bought 700 call options for $50 a share. Oh my goodness. I'm looking at this even more and it's like just wild. So thankfully, first thing, he bought January 15th, 2027. So he's going to be sitting on these for a long time, which again is what I said in the last picture. Buying long dated options gives the stock time to move in a certain direction. But this person put $800,000 into it and the strike price is $50. Right now, it's sitting at, I don't even know what it's sitting at right now. I could probably pull it up on my phone really quick as I'm recording this. I'm curious to know what it's sitting at right now and how likely this is to even happen. So, but again, putting $800,000 is crazy. So GTLB is sitting at about $43 right now. So that's actually not too bad. At the time of looking at this kind of company, I'm not sure what the company does. I could read into it a little bit here. Something to do with data, it looks like. I really do not really know. But this person is very, very bullish on this company long term, looking at January 15th, 2027 in this case. So he's currently down about $25,000. But again, that's not going to see, you're not going to really see as much unless you get a huge move. But he's giving the stock almost, like a little over like a year and a half to really move, which, is plenty of time to sit through the waters and to sit through all that kind of, the rockiness and stuff like that of the markets. And it's interesting. So $800,000 though is absolutely wild. So hopefully it works out for him in this case, but a crazy YOLO of $800,000. Going on to the next one. I read about covered calls over the weekend and decided to try it for the first time on Google. FML. First of all, let's break this down here, okay? So if you guys aren't aware, Google and I think it was the DOJ announced that Google didn't have to sell Chrome because that was like a thing of lawsuit or something with the courts and some of that. So Google doesn't have to sell Chrome, and the stock skyrocketed because of this news, because it's good for the stock, it's good for how much revenue they bring in, because Google Chrome is a huge platform, all this jazz, okay? This person's like, oh, I read about covered calls the weekend, decided to try it for the first time, and now I'm in trouble. First of all, okay, he sold a 250, I looked into this because he put about it on his actual in-depth Reddit forum. He sold a 215 covered call option on Google. He sold 9 of them because he has 900 shares. He's going to be selling, Google's going to exercise and he's going to lose it for 215. First of all, how are you supposed to know that the DOJ was going to come out with this news? How would you know that? You really wouldn't, right? So in theory, yes. Oh, why didn't I do it this time? Why didn't I do it later? There's always those what ifs here. But dude, what if nothing came out about Google and you would have cashed in some extra money? You would have cashed in, you bought them for $100 each. You would have gotten $900 in premium just hanging out there while you have Google stock here. Also, look at your average cost. $171, you're going to exercise at $215. Oh no, I made money on my covered calls and on my shares here. Oh no. So what? He made like what, $45 out of the 171? He made 26% on his share appreciation value. Oh no, what a problem to have. Like, dude, it's not bad at all. Don't write FML. You get out of the position. Google's not going to rally forever. You can get in back later on, maybe. Good goodness gracious, man. You did a phenomenal job, okay? You get to walk out of here with 20-something% profit on your Google stock, which is absolutely amazing. You're looking at least $40,000 in profit of Google stock. I don't know how long he's held it for. I have no clue, but $40,000 over 20% return plus the $900 in premium, and it frees up capital. You can sit on cash for the longest time now in a high yield until the market figures out a direction. It's still going to all-time highs, but the labor market sucks. We have Jerome Powell's rate cuts. Who knows what will happen the next couple weeks, couple months here. So you made 20%, sit there and sit on, $200K for the next, 5-6 months maybe, and wait to see what the market does, right? Nothing to complain about. Don't put FML. You should be like, yes, I'm excited. I get to exercise my shares for 20% profit. There's always going to be those what ifs. Fridge, why didn't I do this? I do the same thing. Why didn't I do this? Why did I sell a cover call here? I'm such an idiot. It's fine, okay? The reality of things are you're going to always look back and say the what ifs. But what would have happened if Google stock came down, 5-10% instead? Those cover calls would be nice. That $900 is premium in your pocket. It's absolutely amazing. So just things to keep in mind about when you're selling cover calls. Also, again, he put them at a strike price that was profitable. Good for you. Very, very, very nice job there. All right. This next one was resolved for RZLV. And he put $600,000 into this. I have never heard of RZLV. I don't know about you guys, but I never have. But right now, this dude is sitting really pretty right now. It's at $4.32. His average cost is $3.53. So he made some money here, but I've never heard of this company. I don't know if there's a lot of just hype behind it because it has the name AI in it. I have no clue. But wow, what a position. $600,000. I don't know if I can ever do that, honestly, into one stock. But if he's worth multi-millions, why not, right? But absolutely crazy. We don't know what his portfolio looks like overall here. So it seems like it's doing well so far, which is absolutely awesome. I would sell covered calls maybe at this point. You could sell 1,700 of them, make some profit on the upside still. And because right now he's above his break even for share price. So why not, but absolutely an unbelievable YOLO here. Who knows how it'll turn out long term? I don't know if he's holding long term or he sees something. I have no clue, but good for him. This person said, I held Google for 3 months and sold today. You can thank me. Again, we do not know when this news breaks. He sold Google at $207 a share right here, as you can see. So he did sell at $207. It's at like $230 something right now at the time we're recording this. But we never know what the data will come out with. We never know that the DOJ was going to release that. If we did know that before it came out, that's considered insider trading, which is illegal. And if you sold these for a profit, because he held it for 3 months, I'm guessing 3 months ago, it was probably a lot lower than that. If he held it for a little bit of time and made some money, why the heck not? Yes, we could have had a lot more profits. Yes, 100%. But if you're able to walk away with profit, can't complain about it. You can never time these news events to come out. That's why these news events always come out either before market opens, after market closes. You hardly will ever see it during the market because it has such a move on the stock. It's so volatile in that case. They're trying to keep it, somewhat reasonable in that case. But I feel like you made profit on Google, so don't worry about it. Hold your head up high. Now you got $24,000 to do whatever you want with it. Next up, it's September, and this is kind of a thought process I wanted to bring up to everybody's attention here. This person made over $100,000 on put options on SPY, S&P 500, but it's SPX is the actual one you're looking at here. Made $103,000. All right, started with it cost him $12,000, and he made over $100,000 in gains. Now, September is historically known to be a red month. This is why I kind of brought it up. September is known for it to be a red month. I think the average return for September is like negative 0.7 historically, like over many, 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 many years. Okay. So this person could have very well looked at these positions here and said, I want to go in with bearish starting off September because September is a bad month usually for the markets here. But what's crazy is that, he added these on the 29th of August and they expired on the 2nd of September. So this dude was really YOLOing this here. He made a lot of money here because, again, these big moves happen with these short-term expiration dates for options usually. Made a lot of money here, but things to keep in mind about with September is that it is historically known to be red. Will it be red this month? Obviously, we have no idea because it kind of just started. But, it's something to keep in mind about that. You can look at historical data. The good months usually November, December, because it's the holiday season. It's euphoria. It's happiness, whatever. September's a bad month usually. I want to say that April and May are good ones because tax returns come back in and stuff like that from people filing taxes. So things to keep in mind about that. You can look at historical data and see what months do good and what months do bad. So something to keep in mind about as a learning, idea for you guys in this video. Next one, can you notice the moment I discovered options? And again, options are very, very risky. A lot of traders could see this happen very, very quick with options here. That's why if you look at options, going far dated ones, as we know, far dated options, leap options, going a year out, maybe a year and a half if you can, really do make a difference. Because what will happen, you'll be able to make some really good money long term and you have a lot less movement short term. So between now, if you had an option for say January of 2027, like that one guy did, even if we had a red day 1 or 2%, that's very, very short term. You still have a year and some change to recover. A lot can happen in a year. Whether it's more rate cuts, whether it's the tariffs are illegal and it pumps the market, the labor market recovers, whatever it could possibly be. There's a lot of things that can happen in that time period. So buying far dated options would be the way to play options no matter what, in my opinion, honestly. Next up, $200,000 YOLO snap. Am I stupid? First of all, if you're going to say, am I stupid on Wall Street Bets, I'm not going to answer that one. But, yes, $200,000 as a YOLO into snap is very, very risky. And he covered his portfolio position size there, so we don't see it. But again, if you have 28,000 shares, sell some covered calls, and there you go. You're going to offset your profit or all your losses a little bit, which would be really nice. So, Snapchat is a company where I hold a call option right now. Not a crazy one, but just a call option for the middle of next year, a little bit farther dated. Because usually it trades between $7 and like $10, it seems like. And it's a company that a lot of people use. It's an app that a lot of people use here. The company just needs to make profit from it. They got to figure out their ways to make profits, stop burning money, because their earnings per shares are still losses right now. So they're not a profitable company somehow. At one point, they were trading for over $70 a share. And that was like pandemic time, I believe. So they have the ability to be profitable and to be able to grow their company. A lot of people using it. Their user base is continuing to grow. I see a lot of my high school students always using Snapchat still. Like, it's going to stay around. They just got to figure out a way to make it profitable. When they do, you're going to make some money here, I feel like, in my opinion. But, not financial advice, of course. This one hurts. Down $43,000 after investing in Fly before they filed for a second bankruptcy this year. Let me double check the ticker really quick. I'm almost certain this is Spirit Airlines. Yes, I'm right. Spirit Aviation. One thing I just want to say. We always say to invest in quality companies. If you're putting in $60,000 into a company that has already filed bankruptcy once, and we don't know when he got in, but it makes it sound like he bought this before him, down $42,000 after investing before they filed their second bankruptcy. That to me comes off as he bought after the first bankruptcy. We want to buy quality companies. You're buying shares of a stock that filed bankruptcy the first time. And here's where I guess my logic would be. Carvana is an example of a company that filed for bankruptcy, I believe, and they reorganized their financial balance sheets like that, and then they took off to like maximum gains of like unbelievable. Like it's like over $200 a share, and it was like $5 like a year ago. I don't know if that was the mentality of like, usually when a company files bankruptcy, they can turn it around like Carvana and then make a crap ton of money. I don't know. But if you are putting 60 grand into a company before their second bankruptcy, I don't know. Very, very interesting trade here. This is the last one in the video, and this is crazy. $500 to $500,000 back to $500. That is crazy. And I don't know if these could be withdrawals. I have no idea. I think when it was posted, it didn't seem like it was withdrawals from the account here, and just took all our money out. But oh my God, imagine turning 500 into 500,000 and then losing that amount. And then he got some of it back, and then he lost it all again. If this is truly just what happened when he took 500 into 500,000 and then back to $500, oh, my heart hurts for him. My heart hurts so bad for this person here. You know, I would have taken so much of that money out, went and bought a house, went and put a down payment on a house, whatever it could have been, put it in a high yield account. Goodness gracious. 500 to 500K is wild. But this is the reality of people trading the stock market. They see these unbelievable gains of 500 to 500K, and they want to double it again. They want to double it more. You know, they want to take 500K to $1 million and to 2. Like, they want to do those kind of things, and it crashes and burns. So I'm hoping that this would maybe be some profit taken. I don't know. But if this is just a pure loss of 500K to 500, that is very, very hard to see. So thank you guys so much for watching today's video. If you did make it this far in the video, as always, make sure that you like the video, subscribe to the channel, turn on the notifications as per usual. This has been Wall Street Bets Week 6 review. Make sure you stay tuned for next week's. That will come out every single Friday or Saturday, depending on my schedule. And as always, I will catch you guys in the next video.